What's going on, everybody? It's Jeff here. Welcome back to the channel. Finally, we are getting the second day follow through that we haven't seen in quite some time. Now, last Wednesday, I made a video stating I was a little bit early. We had that Wednesday pop. Obviously, the bears stepped right in and continued to sell off the entire market. Today, we officially saw the second day follow through. Now, is this an indication of a little bit of a bear market rally? How much higher is this going to go? What is the reasoning behind this bear market rally? I'm going to cover everything in this video. So let's get right into it. First off, as you can see, beautiful trend. It started yesterday, and more importantly, it carried overnight. We never really broke that level of support. If you're looking at the SPY, we're on that 366, 367 area. We take a look over at the futures, just shows a little bit better of a picture, especially with the overnight. As you can see, we continue to move up through all of our levels. Now, while we are looking at the charts, I want to talk about a couple things. Zoom in a little bit for you. One thing notable to mention here is we have gotten over that 200 EMA. Now, this 200 EMA we've rejected off of for quite some time until we got that little bit of break in early September. We continue to run about another 5% all the way to the top. Now, this is when CPI was released and everybody was expecting CPI to come in a little bit cooler. Currently, we're sitting at about 2.3% above that. Now, if we were to get the same equivalent to that little bear market rally we had, that would put this all the way back up to around your 3,900 level, which is another big psychological level. So zooming into these charts right here, as you can see, this was a big area to get over. Right over here around this 3740, 3750, we broke through that. We're really trying to test through that 3800. As you can see, SPY in the market has been hanging around towards the end of the day. Next up is going to retest that 3820, 3825 area. If the bulls can continue to have momentum in this, as well as shorts just getting squeezed out of their positions, you're seeing some of the high growth stocks, all right, running up 10, 12, 14, 15% as of today. Then the market can continue to move a little bit higher. We're testing back in this choppy range around that 3850 to 3920. We spent a good amount of time, okay, throughout this area, all the way back from, let's say, November 15th, 16th, until we eventually got the breakthrough on the 21st. So pause this chart, take a look at it. I will zoom in just a little bit higher for you guys so you can see, look at some of these numbers we have. You can copy down some of these levels and put them on your charts to keep an eye out for going forward as we continue to break through them. And obviously, over these larger time frames, the 30-minute and 1 hour specifically, if we hold these levels, even though you see a little bit of chop, the trend is still intact. Okay, so keep that in mind. Let's talk about exactly what happened. So this article came out yesterday and states the Bank of England reaffirms willingness to buy billions of pounds in gilts. Now, if you do not recall, over the past week, the British pound just completely got obliterated. Okay, the European monetary system was going under a lot of stress. I mentioned about it very briefly in a couple of my videos. Well, let's take a look at a little bit deeper at exactly what happened. First off, a gilt is very simply just like a US Treasury bond. It's issued by the United Kingdom. Now, what was happening was investors were losing confidence in the European markets. Okay, you had pension funds that were, threatened to have to liquidate their positions and also facing some serious margin calls. So the Bank of England stepped in and stated that they were going to buy up to 5 billion pounds, or that's $5.6 billion of long dated gilts. Now, if you're unfamiliar with what I'm saying, just picture exactly what the Federal Reserve did during the COVID, time frame. I don't say the COVID crash, but the COVID time frame. Okay, they're the ones that kept the economy afloat by printing stimulus. Okay, they kept the bond market afloat by buying, $120 billion a month in treasury bonds and mortgage-backed securities. Okay, and it's also known as quantitative easing. So when this news came out, just remember that quantitative easing, okay, it's a very loose monetary policy, and they were going from the same monetary policy that we're in. We're in the quantitative tightening, trying to battle inflation, take some of the cash out of the circulation, okay, which is the opposite of quantitative easing, printing money. We're trying to kind of wheel that back in. Bank of England, the United Kingdom was doing the same thing. Obviously, you can see they ran into some trouble, did a little bit tighter. Things are a little bit different for them over there. And clearly, the Bank of England needed to step in and say, listen, we're going to float the market. So if you take a look at their 10-year gilt, you can see it clearly spike massively over the short time frame and continue to sell off. You can also take a look at, even just our, 10-year US treasuries slowly selling off. Now, when treasuries rise, a lot of times investors will pull away from equities, okay, which is the stock market. It'll pull away from that risk-on asset and switch it over to treasuries. And it's a little bit, obviously the returns are not nearly as advantageous over a longer time frame. However, it's a much safer haven. Clearly, when treasuries start to pull back off, the market has been, severely oversold in a short period of time. That's when investors switch back over. Okay, so that is a big reason for why you are seeing the market rally, as of today. Also, I mentioned in previous videos, and I'll zoom into this daily chart for you. I cleared a lot of my levels just to have a little bit cleaner of a chart for you guys. But as you can see, let me zoom this over me. We were in a severe downtrend for quite some time. We had a little bit of a pop here, getting all the way up until that CPI. We were hanging around that 412, 415, that pre-market. We sold off 55 points in 15 trading days. That's equates to about, let's say, like 13, 14% in the matter of 3 weeks, 15 trading days. That's a pretty hefty sell-off. Okay, when you put that into comparison of how much the market moves generally in non-volatile times, we're due for a little bit of a bounce. We're due for a little bit of that relief rally. Now, is it going to continue? Is it going to just be that 2 or 3 day spike? Well, it's really hard for anybody to tell. Okay, now I've mentioned taking a look at this call to put ratio. Eventually, we will run into a position if you bet against this, where obviously we can, fall into that capitulation. The market insanely sells off. Anybody who has puts gets insanely paid. And if you're betting against it, you just completely get burnt. A lot of times that's when you see VIX spike over 45. The market tends to form a little bit of a base, bottom out, and then, the bear market slowly starts to recover from there. But as you can see, one side was a little bit crowded and we continue to move. So those are the couple things that are happening as of right now. Other news, Tesla continued to be very volatile as Elon Musk put out another tweet saying, listen, you know what? He does want to buy Twitter for the same price. Twitter immediately spiked, halted a couple times, and then eventually down halting because there's always a possibility that the deal cannot go through. So take a look at this chart. I'll look at it one more time. You can pause this. Okay, you can put these levels on your chart. I'll zoom in a bit for you. You can put these levels on your chart. That 3820 is going to be big next, and then we are looking to test this area. Zoom out a little bit at 3850 to 3920. How that correlates with SPY? Well, take a look at that same chart, and you can see where we are on that 381 all the way up to about that 390. All right, and when you zoom out, I hope some of you guys are really starting to see this as this. This was one support. We bounced off of it. A little bit of support again, broke through, retested as resistance once, twice, eventually came through. Trend starts to change a little bit. These levels, become very relative when going back, to the upside. So keep that in mind, guys. That is it for this video. See you in the next one.